Gopal Agarwal is joining us. He's Senior Fund Manager of HDFC Asset Management Company. Gopal, pleasure to have you with us here on CNBC TV 18. Good afternoon.
Good afternoon.
The market towards the end of last week looked like it was kind of hesitating. But as we come out this new week, no problems, looking pretty solid. Your sense, Gopal, lots of mutual fund managers we've had on the program over the last 2 weeks or so have sounded more or less cautious about prospects in the near term because of the run-up that we've had, valuations, etc. What's your house view?
So I would like to share my thoughts on the market particularly. At this juncture, I really feel macro stability in India is quite strong. And, there are really banking and financial sector looks very interesting. There are really, not much issue except the valuation in the near term has gone up. And we are seeing incrementally the growth slowdown into the Western world. And also the even China is going through yo-yo in terms of opening or, shutting down. So definitely external pressures are there while the domestic news is quite positive. So I would say there will be tug of war till the next earnings season. So the market would like to, trade within a band until unless the next quarterly result season, which will really give the direction to the market.
The fact that India's macros will appear resilient is only in the case if there is a shallow recession in US and EU, right? That's when India's growth of 6-7% will start looking very impressive. But what happens if the US markets and the European region go into a deeper recession? Then what is the base case for our markets? Would you then advise people, remove money out of the equity markets? Are we in for a bigger downturn?
So if you look at our market per se, we have almost 50% earning comes from the local earning and 50% earnings is linked with the global side actually. So our market is well balanced between the two. I would really say that, our earning impact will be quite less because this time, this balance sheet of individuals and corporation, both in US and Europe is far better than 2008 or 2014. So definitely this time I really feel a very chance of a very shallow recession because of the very strong balance sheet actually. So there will be certainly slowdown, which we are penciling in. That is why, the growth GDP expectation from 6.8% is likely to be between 6.1 to 6.2% next fiscal in India. So definitely return expectation should be moderated after a great stellar rally in the market. But I would still argue that equities are well positioned if we use a staggered approach.
Hi, Gopal. Good time to get you, actually. You're sounding pretty optimistic. You're brushing aside the near-term challenges, maybe in terms of valuation or in earnings, but you're sounding more constructive on the markets. And as you mentioned at the start of this conversation, BFSI is something that still could look good from here on. How much of the good news is in the price? And if you're looking at BFSI, what would it be? The large private sector banks? But the PSU banking names have been the ones that have given you big returns. So would you allocate some money out there?
So certainly, I would like to have a balanced approach at this point of time. Very clearly, Nigel, what we are really seeing that loan growth is quite strong in India, is close to 17-18%. And at this juncture, the NPAs or the credit or the slippage is also at a you can say decadal low at this point of time. So there is a room for catch up even for the the public sector bank or the NBFC at this point of time. So definitely a balanced approach is the right approach. On a whole, I would say that the BFSI space is trading close to 7% discount to the long-term averages. So you can see still there is a room of safety in the valuation of banking sector at this point of time.
Gopal, PSUs as a theme, not just PSU banks. I mean, I was looking at moves in names like GIC, RE, New India Assurance. Is there anything? I mean, I don't know if you have any thoughts specifically on these PSU insurance names, if you own them. One common thing between both, one is a reinsurer, the other is a general insurer, is that both have done very poorly since listing and off quite a bit from the highs. Any thoughts at all? Or is this just, market trying to squeeze out the last one in terms of gains? hunting for underperformers, big underperformers, and bidding them up? Or is there something going on? Yeah.
So in general, in insurance sector, what has happened in the past, we had a great rally, but in the last 18 months, because of high COVID claim and the loss ratios were higher, so it has resulted in, suppressed profitability and ROEV. So I expect it can normalize. So it gives us a trade, but structurally still in India, this space is not very attractive. So, but definitely from a lower level, there can be some earning upside in the near term. So that's my short term. You can say tactical call. You may have at this sector.
Where is it that the risk reward is most attractive according to you? Your top 3 sectoral bets or individual names, if you could help us with that.
So generally, I am constructive on banking and financial space, where I am taking quite a lot of weight in my portfolio. Second, I am very positive on engineering and manufacturing, even after a stellar rally of the last 2 years, because what happened, they generally support to the companies which are unlevered, and they really support to the manufacturing sector, which in my view, with the help of PLI and new wave of investment into steel, cement, and refining. So they are well positioned at this point of time. That is my second sectoral overweight in my portfolio. Third, I am running contrarian slight overweight at this juncture into the auto sector. Because I feel running into the election in 2024, rural spending should pick up from here, and we are in a benign commodity price environment. So that's my top 3 sectors in the portfolio.
All right, Gopal. So if you're positive on autos and if you're saying rural consumption is going to come back, then what do you play? Tractors or two-wheelers?
Certainly, I have a combination of the both, and also, we can see that some of these auto anchors should also benefit, because not only from the rural India, and also they will benefit from, the EV penetration.
Right, Gopal, it's been good hearing your thoughts. Thanks so much for stopping by. Well, I don't know whether we'll get to chat in this year itself, but it's been good hearing your thoughts and looking forward to chatting up with you in 2023 as well. Have a good end of the year. Well, it's that time of the day then where we get in Nimesh, because he'll give us a bit of an insight into what's going on in dealing rooms and help us to decode. Well, Nimesh, at the start of today,